Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The market volatility has picked up ahead of the awaited non-farm payrolls report for November, which will offer greater clarity on the state of the US labour market. Forecast highlights around 180,000 to 185,000 jobs added, following the previous release of 150,000 jobs added. The unemployment rate is seen at 3.9%. In a separate report on Thursday, the US job claims rose by 220,000. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, took a tumble from the 104 and settled around 103.5. Looking at the Australian dollar, the market has clearly rebounded in front of that key level at 65.2045, posted an engulfing or bullish candle after previous inverted hammer, and shows potential for a further climb. I'm still looking for a topside challenge that is on towards 66 to 67 cents. With any pullback, still expect to see a bullish ambush from that bottom side of the range, as I stated, at 65.2045. The euro also posted an engulfing candle, and from that could see further gain. That is if we get a break of 108.4045. This would generate further momentum and on towards 109 to an objective of 110. Any pullback still sees that key support level around 107.2025 as a short-term bullish base. A very volatile price action for dollar yen as speculation boils about the Bank of Japan exiting negative rate policy. The market was very whipsawed, crushing the level of 144.5 and now putting an objective around 141.5. That could also see further losses down to 138.40 to around 138.60 area. We are oversold though, but technically there is still room to the downside, and the trend strengthening rather strongly could support that downside call. Sterling, well, the market no doubt will be expecting next week when the Bank of England will hold its rates around 5.25% when it releases for next Super Thursday. But still, the market is anticipating for a further climb as we are looking now towards the top side around 126 to 127, and a base still holding respectively around 125.25 to 125.50. Well, since that blow off top, the market hasn't really staged any significant moves and still poses a threat to the downside. And if we see a break of 2007, that will confirm this large engulfing candle and put a trajectory down towards 1,968 to 69. Any upside attempts, I feel, towards 2041 as a near-term cap. It looks like oil's still struggling to recover after seeing a dead cat bounce. That could see now move to 67.10.25 area, where I've outlined here, due to the trend that's holding a bear case. Along with that, technicals that are negative, any upside attempts are likely to struggle. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.